All right. Hello, everybody, and we're live. Nice to have the early birds in the house tonight. Hey, folks, I'm going to let Brady entertain you for a second because the guest is calling me on the phone. So, Brady, take it away.
Take it away. Let me see if I can figure out what to say. I see P. Kelly. Good evening to you, sir, and see if I can drive with my left hand on the steering wheel, right hand on the shift. Wonder if anyone here knows how to fly a helicopter, because that's kind of what this feels like. Kelly Slade, good to see you here this evening. And, of course, greetings from Malibu. Thank you, Johnny. Linda Cook, yes, happy Friday. And I'm not sure if Jerry is making way or not, but I guess we'll find out. Hello, T. Rich. Yes, and who could not forget Mr. Bill Gould. Let's see if I can
All right.
get into this. And here's Jerry.
All right. Hey, everybody. So, a dear friend and a very bright guy, Mr. Bill Bean, will be joining us in just a minute. And the title of the video tonight, The Art of Changing Your Mind, one of the elements that I think is so valuable as an investor is this concept that I got from Peter Sannington back when I first started my channel, and I got to interview Peter. Peter is well known as a very early Bitcoin investor, ran a podcast that was very popular for a long time, and was one of those guys that got a lot of publicity for the Bitcoin Lamborghini. He bought a Bitcoin. He bought a Lamborghini with Bitcoin. Which I probably wouldn't have done. But the point is Peter had this saying. He had this saying that he holds his opinions very strongly, right? Sorry, correction. He has very strong opinions, but he holds them very weakly. In other words, he's willing to change his mind as new information comes into play. And I think that is so valuable as investors. The reason I bring this up is I see so much on Twitter, on Facebook, and specifically on a lot of YouTube channels, people locked in to a mindset, and they're like locked on like a pit bull, despite an abundance of information that is contrary to the opinions they hold. Now, I'm not saying every opinion that's different than mine, I should abandon the opinion that I have. But as a general rule, I try not to ever dismiss any opposing position to a position that I hold. The reason being is twofold. One, there's a humility, right? There is a humility in listening to somebody else's point of view, even if it is directly opposing my own. Now, that particular piece, that willing to listen to a view that's different than mine, and being intellectually honest enough to say, I don't know everything about everything. There could be merit here. If I even feel like possibly there's a little merit, it'd be really advantageous for me to dig into that and explore that. I have a couple of case in points. I'm going to share an example with you all. When I came to this space in February of 2018, started doing my preliminary research, and I found XRP and what Ripple, the company, was doing to further its use case. It all made 100% sense to me. And I spoke with my investment dollars. So up until approximately January of 2020, my entire portfolio literally was 95% XRP. And as 2020 rolled around and we got pandemics and political strife and the emergence of things like DeFi, centralized platforms like Nexo and Celcius, taking it up a notch, going from strictly a place where you could collateralize a loan to platforms that would allow you to place your assets there and earn a yield, all being made possible by new market structures. It was important to look at what else was going on in this digital asset space. Now, as new money came in 2020, I got to start building some positions in other coins. But the real meat and potatoes of how I developed my portfolio came in December of 2020. Believe it or not, it's not been that long. And that was the news that Ripple was going to get in a court battle with the SEC. And the minute that happened, I liquidated 130,000 coin position that I had in XRP. Never changed my mind about the tech, but I had to be real and honest about the position I was holding as an investor. See, one of the things I'm very concerned about is the time value of my money, right? When I go back and do the math, had I held firm with diamond hands onto my XRP position, my XRP position would have brought my portfolio to, $320,000, which is, there's nothing wrong with that. My portfolio is a tremendous amount larger than that right now. And the reason is because of the return on the investments. When I diversified and I sold that XRP, I was able to get into other assets and take much larger positions. Assets that have gained thousands of percent since then. XRP year over year is 300% increase in value, which is wonderful. Compared to the NASDAQ, that's great. But in crypto, not so much. Now, it doesn't change my mind about the technology. I love XRP. I think it's a wonderful asset. But as an investor, my loyalty is to my balance sheet. And when there's a market that's offering me thousands of percent return, it is silly of me to disregard it. To talk about that and really dive into this subject of the art of changing your mind, I got a dear friend joining me, Mr. Bill Bean. Let me bring Bill into the studio. Hey, Bill.
Hey, good to see you, man.
Good to see you too. Hey, we had a bad phone connection, but here I got you here. You can hear me okay?
Yeah, I can hear you fine. The Battle
Excellent.
of the Gremlins. Yeah.
It looks beautiful where you're sitting.
This is the second cool day since June, so I'm enjoying it out here as long as I can.
Well, right on, right on. You're in Colorado, correct?
Yeah, I'm in Colorado, about 40 miles south of the Wyoming border.
Wonderful. Well, I'm glad that you were able to break away with, from your coffee with Charles Hoskinson to join me here on the show. I wanted to ask you, you submitted a photo of some, like a list of things, and I really thought they were pertinent, and I was curious, do you have that document on the device you're using to broadcast right now?
I did it on iPad, but they talk to each other, allegedly, until we saw what happens tonight.
Okay. Well, this software, there's a toolbar underneath the picture of us, and there's a share screen option.
Yeah.
If you could find, don't share screen yet. If you could find that document, have it a tab open or have it as an application open, right, then share screen, go to that. I would love to periodically be able to put that on the screen with us.
Yeah, very good. And I wrote that in I don't know, about 9 minutes because I wanted to have some kind of prompts. So it's pretty rough, but yeah, I'll see what I can do.
I did. And there's a question or two coming in here. I've given my loser crypto till end of the year to break even or sell for a loss. There you go. And that brings up a good point, JDO. Selling an asset at a loss is a completely different thing than looking at the difference between 100% return on investment and 1,000% return on investment. I generally never sell anything at a loss. I will hold it until it's not a loss anymore, until I at least can break even. Sniff comes in with a question. Hey, Jerry, did you get a chance to check out the Roundhill Ball Metaverse ETF? Here is the thing. I did look at it and wasn't impressed. And I'll tell you why I wasn't impressed. Generally speaking, any group of assets that is in an electronically traded fund is going to have a diluted effect on the price of that asset relative to the underlying asset itself. So if the ETF goes up 100%, but the assets that are contained in the ETF are going up 300, 400, 500, 1,000%, I would much rather own the underlying asset than an electronically traded fund version of that asset. I hope that answers that question for you. There are times where vehicles like that are going to be appropriate because you cannot do what you would like to do. For instance, if that ETF is something that you can get into an IRA and you cannot get the underlying assets in the IRA, then maybe it's a really good opportunity to get exposure in your IRA to the thing that you really believe is going to be a growth engine for that particular part of your portfolio for X period of time. Welcome back, Bill.
Hey. Yeah,
all
so
right.
I have the document on my iPhone, but it does not, there's not a key on StreamYard that says share screen like Zoom. So
are you talking to me on your phone?
Yeah, because I wanted my iPad. I wanted my iPad to be visible to me.
Right, as it should be. Well, you know what? Maybe what I'll do is I'll let Brady man the chat. I'm not going to be able to look at the chat, Brady. I'll go to banners and I'll just create a banner each time. So, Bill, why don't we kick this off? This is all about the value of being able to change your mind.
Yeah.
So sure you come from a world of strategic planning. You deal with corporations and CEOs that have put a lot of thought into when they are going to make a change.
Yeah.
And the mindset of making changes can be frightening to some people because it can have ramifications, sometimes very, very painful. So why don't we let you kick it off? And as you read off your first thing that you want to address, I'll create a banner and put it on the screen.
Okay. All right. Very good. Yeah. And real quickly, my background was with IBM doing a lot of strategic planning for one of their pretty large divisions. And then when I left, I started my own strategic planning consultancy and have written a number of books on it and had about 250 clients across about 75 industries and really found out that the process is falling down on implementation. So I really err on the side of practical tools that are stress tested and that work. So that's my background.
Well, let's leverage that background with the first heading that I can type into a banner.
Yeah, very good. Yeah, so I didn't order these, but I will. Yeah, let's start out with, okay, I would like to start out with resources, finding the best experts for advice. Resources, finding the best experts for advice. My journey started actually in foreign exchange in 2011, and I've been avidly learning investment and trade since then as I wanted to develop a path beyond traveling which has turned out to be about 4 million miles. I wanted an alternative to that. But anyway, so I started out in Forex and came to crypto by doing research. I think that's where you should start out. I spent thousands of hours by now researching. And I believe it's very important to find the right experts that you trust.
Bill, somehow you muted. Billy, unmute your iPhone. Or was that me? No, he did it. Billy. No, it's not muted. Comments. Can you guys hear me? Can you hear me or can you hear Bill? I feel silly when I don't know what's going on. Okay, my sound, I can hear myself. Hold on, I can read lips. No. Kelly, you hear me or you hear Bill? Okay, you can't hear Bill. Billy can't hear me. We can't hear you. We can't hear you. Nada, no Bill. Speak now, Bill. I think I hear something in the background. No.
Okay. Yeah. Great.
Now I can hear you. We couldn't hear you for the last
weird.
5 minutes.
My mic told me that I was fine. That's really strange. Anyway,
I don't. Your mic lied to you. It deceived you.
Yeah, it did. It really did. The good thing is the gremlins must know there's something very valuable that you and I need to talk about, and we'll discover what that is. So it should say the resources, finding the best experts for advice. And what I was saying is essentially I started out in Forex and shifted over to crypto. I started Forex in 2011, crypto since 2017. It's about 4 years. And I found that finding the right resources that the industry confirmed and that I was comfortable with and that had a good track record was very important, and that I consider you my 1A resource, because the amount of light and input and confirmation and even challenge has been absolutely critical to the successful path.
And you've been that for me too, and I think each and every one of us, as we are on our own journeys, we're exploring YouTube, we're exploring Twitter, we're exploring Instagram and what have you. I've been very fortunate in that I have found some voices that resonate with me on a real deep level.
Yes.
Like Raoul Powell is one of these voices that I just get it.
Yeah, agreed.
I get it and I get him. You are like that way with me. I have a lot of friends that I've made because of as a result of the exposure I've gotten with this channel and my presence on Facebook and Twitter. Nick Black is one of these people. There's a ton more. There must be 30, 40 people in my Rolodex. Rob over at Digital Asset News, Jungle Inc., guys that I've called and talked to. And even though we may not agree on things, there is a very respectful dance that happens when you open yourself up to an opinion different than your own.
Yeah.
And having an expert, like you say, to bounce things off of, even if they do not confirm the bias that I have, there's enough respect in who you are and these other experts in my life are as people that I will take the time and listen to them. And for the most part, like anybody here in the chat, when they're talking about stuff like the case in point with the Metaverse ETF, after the show last week, I did go look it up. It didn't set my heart ablaze, but that doesn't mean it's a bad thing. It just wasn't like the right thing for me. It didn't speak to me. I mean, if people don't know this, Billy and I, we can easily spend an hour and a half on the phone and feel like it was a minute went by. It goes
No
by.
problema, amigo.
And we have had some very heated conversations specifically around some points of where my opinion differs from Bill's.
Yes.
XRP is a great case in point, you know, and that doesn't take away my respect or love for Billy because he has a different opinion than I do.
I don't know that they're that far apart, really. By the time we sharpen each other's saw, it seems we've intersected along the way.
Well, I look at it's that particular asset's percentage of your portfolio, and I don't know how much I've been able to get across.
Yeah, about 25%.
Okay. Oh, wow. Then you have done some shaving. It was a lot more.
I did mention that to you, but I probably was speaking too fast.
That's okay. So this is a good one. I'd like to know from the audience, who are you guys listening to? Like, I'll tell you, I haven't given a lot of credit in the past to this dude's channel, but that I'm about to mention. But I think the dude that's named Guy from Coin Bureau puts out a tremendous amount of value. Guy from Coin Bureau puts out a tremendous amount of value. And there's a dude named James from Invest Answers that I believe puts out a lot of value. James kind of heady, very math oriented, and I like that, but not everybody's cup of tea. Guy, I appreciate what he does to the point where if he puts out something on a coin, I'll watch the whole video, whether I agree with him or not. And there have been many times where I've gone and had to do further research as a direct result of some things that he brought up in his analysis or discussion, the video that he did on this, on this particular coin. Case in point, Solana. About 5 months ago, he did something on Solana, and I looked into it. And although I wasn't necessarily thrilled, there were elements of it that I went, okay, there's some there. I made a very small investment, about 100 coins. And I'm telling you, nowadays, I'm glad here 5-6 months later, I'm like, wow, I'm really glad that I did that. Now, will I increase my position? Probably not. I'll just let it sit there in the wallet and earn yield, and earn more Solana. But the point is being open to something beyond where you're at is the stroke. It's kind of like a mark of being an adult. There's a maturity to that and a humility that comes with that.
Really so.
Yeah.
Anybody pointing out some great resources, or should we go to
the
next point?
I'm hearing, we'll let them, we got James and the Coin Bureau, both. So Kathleen says she likes both those guys, James from Invest Answers and Guy from Coin Bureau. Right on, Kathleen. All right, let me get the next banner ready.
Okay, I'm going to do a twofer and call it plan and process. Plan and process. And I would put with that : have a system and discipline. Okay, so plan and process : have a system and discipline. Obviously, there's a lot of trial and error. I mean, I've probably made, 30,000 trades over those 4 years in cryptocurrency. And I've had situations where my portfolio went down 90% due to the extreme bubbles. I've been through the COVID impact. I've been through the very cruel and unusual punishment of the SEC action. You learn from these, but the key is to constantly be honing in on having a process of trading and investing, and having a plan, which is the water that flows through that process.
I'm a big proponent on having a plan based on the goals or things that you want to achieve. But I always refer to the word goals, right? What are your goals? Because if you don't know where you want to go, how can you design a path to get there?
Absolutely. Yeah.
Right?
Yeah.
I think it's really that simple. We can almost just put a pin in that one right there. Just leave. I mean, that one, I don't know how much more needs to be said about that. Anybody, keep in mind, any of these things you want to ask questions as we keep rolling, please do.
Yeah.
All right, what's the next one there, Billy?
Yeah, just before we do that, I just want to hit home that, and this will lead to the next one. Plan and process does not mean a static plan that never changes. I started out basically using Tika Tawari. I came up with 50 positions, and I had about 2% in 50 positions. Then I winnowed that down as I got more learning, and it went from 50 to 20 to 10 to 4 to 1 when I realized that XRP was disproportionately better than everything else. That's where Jerry and I absolutely intersected. I did not pull away fast enough. Jerry had a massive victory in immediately liquidating XRP after that announcement. I was later, and it cost me a lot. There's a big lesson there. But anyway, then basically went into 4 and then 10, and now I have about 30 cryptos. I had 100% concentration in XRP before that announcement. No, yeah, just about. And now it's about 4 groups of 25. I have just 4 different pockets. XRP is 25%, then highly delineated across those other 3. My point is simple. The plan absolutely changes based upon new news. Yeah. And so let's see what's next. I think, how do I crystallize it and avoid the mosquitoes? Jerry, I'm happy to say that you sent the mosquitoes from Costa Rica. I don't know why you did that, but you did. Anyway, they are here. Yeah. Let's talk about handling crisis. I would call it resiliency, patience, humility, and adaptability. Resiliency, patience, humility, adaptability. Those 4 really get to the inner game of how you survive 4 years of turbulence, bad news, significant impacts backward. They're very, very important. Let me hit the first one. I really think of the 4, humility is at the core. If we're a proud person that's trying to constantly justify our positions or rationalize our decisions, instead of just looking at things as they are, taking everything in, learning from them, and adjusting quickly, I just feel that humility is an incredibly important mindset. When Jerry scores a goal in our discussions, I tell him, Jerry, red light, you just scored. I get it. Thank you. We need that sense of humility that we're always learning, always benefiting, always calibrating.
I could not agree more. And the process does change.
Yes.
You know, my plan, I'll never forget this. So I spent a tremendous amount of time, Billy, putting together an exit strategy. This is 2 years ago when I first developed the Beyond Moon series with Cryptopolis. And I did this 1 whole hour video on my exit strategy. And it was very entailed. It was this much at this much with this percentage going to this thing to create this residual passive income stream off of interest of this for this and do. And it was very entailed and it was very wonderful and it was the best I could do at the moment. But as I matured and grew as an investor, I realized that exit strategy is I would not touch that particular exit strategy with a 10-foot pole. And the reason being, not only have I changed with the knowledge, with maybe I'm a little more knowledgeable of this sector or this element or these principles, but also the market we are in is changing. The market we are in is maturing. And with that maturation comes different dynamics.
Yes.
And we need to also be willing to embrace those as well.
Yes, absolutely.
Yeah, I'm with you 100%.
Yeah. So, and I just think, so humility is extremely important. It's extremely important. I think the partner to humility is resilience. The ability that basically says, knock me down, I'm getting up. Knock me down, I'm getting up. I will not quit. I will outlast. And that really ties to patience. This crypto will knock you down. The loose hands will be shaken loose. The people that maintain their humility and their focus and make adjustments and are patient will win, because you will eventually find, the cycle will find you and you will find the cycle. And if your plan has logic and it's solid, the timing will happen sooner or later, and then the exit strategy will really be critically important.
Well, I'll tell you, I would take it even one step further. I think that resilience and patience are byproducts. They're not fundamental. They're byproducts. And therefore, when I look at a fund, how can I build something? I want to build it on a solid foundation. Why not look at this from a commitment standpoint? If you make a commitment to become a better investor and you're employing goals and the discipline of every month I'm putting 5% of my income into these assets, whether it be 10 cents on every dollar into this or 5 cents of every dollar into that, whatever the strategy that you're implementing, that discipline, the patience and the resilience when things go wrong all come back to if you understand commitment.
Yes.
See,
yeah.
A lot of people don't understand commitment because their life and their behavior in their life is predicated off of emotion, how they feel. Commitment doesn't have a feeling. When you make a commitment, you make a bond, you make an agreement, yes. And you do it whether you feel good about it or not.
Yes.
Whether you're happy in the moment or you're bummed in the moment. Mm-hmm. So when I decided a long time ago that I was going to commit to learning this game and I was going to commit to having the sum total of my resources go to work for me and not buy dinners and shoes and cars and things like that.
Right.
Then I had to commit to a completely new lifestyle.
Yeah.
Even though I would have liked to buy new shoes, I didn't. Even though I would have liked to gone to the movies to see the new Marvel superhero movie, I didn't. I would have liked to taken a taxi instead of walking. Yes. I would have liked to take an Uber instead of taking I would have liked to have a hamburger instead of Top Ramen or beans and rice. No, you giggle.
I'm giggling because I know your story.
So many people are willing to allow how they feel about things dictate what they do versus being committed to something and following the commitment even when it feels bad.
Yeah, really. So the red light has gone off. I have a surprise for you. I developed something that really was leading the strategic planning industry called a values matrix. And it says you start out with foundational values such as integrity, dedication, integrity is a very good example. Then on top of that, you have service feature values like customer service, excellence, quality, and so forth. Then you have the resultant values of what comes out of that, and that is customer loyalty and financial success. And then you have your legacy values at the top, which in the case of a commercial company would be market leadership, market share dominance, whatever that legacy is. Or in the case of personal values, it could be providing for my family, achieving our ultimate calling. So I really agree with you. Commitment comes underneath plan, and it's on that foundation in which oxygen is pushed up that results in plan and process. So well said.
I want to address this question from JDO. Hi, JDO. He asked, Jerry, so when a coin does not grow as your timeline progresses, what do you do as a part of the plan? Well, I will tell you this, JDO. I think this is a great example. Case in point, up to about 2 weeks ago, I had 2 tokens that I really thought were wonderful projects, Atom and Algorand. And the market was telling me, we don't care. However, keep in mind, I don't make an investment in a coin that I don't believe in and that will not produce me a yield. And when I say yield, I mean if in the case of Algorand or Atom or any coins that I own, if I'm not earning more of that exact coin, so all the Bitcoin has to earn Bitcoin, Ethereum has to earn Ethereum, every coin has to earn more of that coin. If a coin isn't performing in the market, but I am continually on a daily basis, weekly basis, monthly basis, acquiring more of that coin, that is really the only thing that is a must for me. The coin must produce more of the coin because we're in such a baby market. I don't know. So I have literally everything I own with the exception of Bitcoin, XRP, Audius, and GRT. Oh, Theta are all smart contract platforms that the potential for something to be built on them that will reach 1 billion people is still there. So that's the thing for me. So JDO, for me, if one of my smart contract platforms is showing me that it has lost the ability to have an app be built on it that will reach 1 billion people, I will consider cutting bait.
Yeah.
But until then, it's such a baby market. Why would I? And I'm earning more of it all the time. Case in point, I had this 5-month thing going with Algorand and Atom. It's like, God, they're not doing anything, but there's such really sound technology.
Right.
Now look, all of a sudden, look at the last 2 weeks of the performance of those two tokens. So it's like I don't assign hard timelines to things because we're in such a nascent period of this market to know with certainty. So that's why I stay away from rebalancing. I don't rebalance my portfolio. I bought the coins. They're there. They're earning yield. And if one goes up more than the others and takes up a larger percent of my portfolio than others because it went up so much, I'm not going to sell some of it to bring its percentage down so that I maintain 40% Bitcoin and 10% of all the layer one project. No. I put the money in. I'm a long-term investor. They're going to do what they do. And if they're earning me yield, then they're doing what they're supposed to do until they get an app built on them that'll reach 1 billion people.
Yeah. A great example of that is Jerry really shook my tree in March and said, Billy, you need to be more diversified. He shook it real hard. And he said that Cardano ADA was a major play that could provide excellent yield of over 5% if on the Daedalus site with the development of a wallet. I did that. I think I put about 22,000 tokens in there that I have now, and they are producing yield. And as you know, the price of ADA has gone up, and when it reached $3, and now it's gone back a little bit, I thought to myself, boy, am I glad those are earning 5+%. So that's an excellent example of having your assets working for you, not just with the hope of appreciation, but with the basis of generating additional tokens. Thank you for that, Jerry.
You're very welcome. You're very welcome. JDO, I think, again, he says, JDO, acquiring more of a non-performing coin does not seem intuitive. You're right. It doesn't seem intuitive. But how do you know when the market is going to turn any one direction? All right. Case in point, I did sell 130,000 XRP. All of them, every single one. I did not have one single token when I was done that night. Within a week, when the price went down to 19 cents, I re-entered at 22 cents and bought a bag of 10,000 of them. Relative to every other asset in my portfolio, XRP is sucked wind. XRP is the worst performing asset in my portfolio, period, bar none. Am I going to sell any of it because it's the worst performing asset? No. I bought a size in a position that I felt comfortable with. It's earning yield. And as a long-term investor, I am willing to let that go to zero. Actually, I'm not. If it went down, and here's the truth. If it got close to my average cost per acquisition, I'd dump it. I'd dump it like a hot rock. But it's at $1 something now, and my average cost is 22 cents. So there's a long ways to go before I consider removing it from my portfolio. And until then, it can continue to be the worst performing asset in my portfolio because I do think the tech is wonderful and it might hit its market fit. It might find its place in this market, and who knows where it could go. I don't think it's going to be all the money. I'm not convinced that the tokenomics of it will send it to hundreds of dollars per coin. But do I believe it could be a $10 performing asset that'll actually be used in commercial flows? Absolutely. That is very possible. And I've got a bag of them, if they do, that I bought at 22 cents each. So hello. I hope that answered your question, JDO.
Where would you like to go next?
Where do you anywhere you go? I can press a button and I could create a banner in 5 seconds. Fire away.
All right. Yeah, I really
Pick
like
the best one, Billy. Pick the most important one you want to talk about because it could be the last one. We got Bitta coming in later, and these are only an hour-long live streams, and we're at 41 minutes into it right now.
Okay. I think that we should talk about risk management, and I don't mean it in the traditional sense. So risk management, prepare for both extremes. Risk management, prepare for both extremes. What I mean, group, it's just not the classic risk management definition that says prepare for the future, but it means holding in your mind the opposite philosophies at the same time. So it's concurrent thinking. And one is saying this is going to happen, and the other is saying that is going to happen.
Give me an example, like going to zero or going to $1,000. Let's talk about XRP. XRP, all the money in the world, or one of those assets that didn't make it?
Yeah. So, well, I would say XRP, and then there's Doge, but anyway, yeah. So I mean, on the two sides, one side would be being a maximalist. I think being a maximalist is a huge sub-optimization of thinking. It's only taking one side in. And then the other side, I would say, is wide portfolio. So one is saying have one. The other is saying have wide diversity. And the balance for me is in the middle, because I believe we need to go where our heart is telling us to go in reasonable measure, but also have supporting assets such that if that does not materialize like it should or when it should, I have a cadre of 10 and then 10 behind it that I believe are strong. So maximal would be one side, wide diversity would be another. I'm in the middle because I take both into account. I learned a lesson about XRP, Jerry, and the market taught to me, and people like you taught me. So anyway, that's an example. I just think we have to be very wise to have the guts to include a diversity of opinion and looking at both sides that account for timing and characteristics and belief in the basic tenets of the asset. Yeah, very, very important. And that's why, Jerry, I really like our discussions. Typically, we exercise both extremes and we look at it, and then we say, okay, where do we go within the bumper pads is the right course in the middle.
Well, I think another way of what you're saying, and maybe how I would phrase it, is looking at everything, putting everything on the table.
Yeah.
Right? Because at the end of the day, as an investor, we're not using other people's money. This is our money. Most of us traded our time for this money. And the truth of the matter is time is the most valuable asset on the planet. Ask anyone who's getting older and they will tell you That's a true statement. Time is the most valuable asset we have. And if we've traded it for currency, when we make an investment, it should be not willy-nilly. It shouldn't be willy-nilly. And the truth is, most people will put money on things before they fully understand it.
Yeah.
And there's nothing wrong with that. If for instance, putting $100 on a token is the impetus for you to investigate it before you put $1,000 on it, then go for it. But don't put your life savings into something because you watched a YouTube video or, some dude that you spent $300 or $3,000 signing up for his newsletter said this is the next big thing.
Yeah.
Do your own research. And if you don't know how to do your own research, start with that. Research how to research.
Yeah.
We got a wonderful YouTube contributor in the crypto space, primarily XRP, but she's very open-minded. Crypto Eddie in Japan is the quintessential researcher.
Yeah, she's good.
And there's a video on my channel where I interview her, and for the whole hour, all we talk about is her process for research. Just go to the link and find the Crypto Eddie interview where it says research in the title, and that, if you don't know how to research, go do that. There's no shame in not knowing something. And I think that's an important thing to realize and acknowledge.
Absolutely is. The guts to be wrong, the guts to learn.
And to admit, hey, I don't know.
Yeah.
I don't know. I mean, there are things that I hold very strongly, opinions I hold very strongly.
Right.
And I'm doing the best I can as I mature to have weak enough hands to let them go when new information is contrary to my belief. That's sound, valid information.
Yeah. One other word I haven't used yet that I think is important, and it may strike you as a bit of an overblown word, but it's interdependence. If you're too independent, you are cutting off valuable input. If you are too dependent, you are limiting your world to too few inputs. Interdependence means that I have my eyes wide open to receive good information, but I also have the guts to stay on track with my plan. So I think that's very, very important. Don't be independent as a lone ranger. You'll miss optimization, and don't be over dependent on too few resources.
Crawford brings up a great point here. Crawford says learning how to learn should be what they teach in school.
Oh,
Instead, they teach you how to regurgitate. Crawford, so well said.
Well said.
We could spend the next 5 hours discussing the frailties and failures of commercialized public education. Let's just be grateful that we have vehicles like YouTube that is not regulated and anybody can come on and do something. And if you find somebody you resonate with, then right on. And if you're not finding what you think should be present, the wonderful thing about it is it doesn't cost anything to start a channel. Case in point, this guy right here who would not spend a nickel to start a channel, but I did start a channel and was able to do everything I do for free.
Awesome.
Yeah, I mean, 'cause I'm not gonna spend any money doing this. I mean, that's silly.
Yeah.
Here's XRP Gordon's got a question for you. How long do you guys think it will be before we can buy real estate directly with digital assets? Well, I already know the answer to that, but Bill, would you like to chime in?
Well, since you claim to know the answer, I think you should go first, bud.
I do know the answer, and you can do that right now, XRP Gordon. XRP Gordon, if you want to buy real estate right now with digital assets, go to Lofty-AI. Lofty-AI is tokenizing real estate. And as a matter of fact, if you own Algorand and you have a My Algo wallet, you can connect it use your debit card to buy their two, you buy one or two or whatever. I mean, they have houses that you invest in, a token, a percentage of the house that you invest in, and then they put those tokens in your Algorand wallet. So we are, and one of the members of my Patreon group is a real estate broker, and during his session today, his one-on-one session, we did that. We set up his Algorand wallet. We moved his Algorand over there. We went to the Lofty AI, bought pieces of the tokenized real estate, which we were tipped onto by another Patreon member who put out the news thing about it this morning in our Patreon only WhatsApp group. Hey, check this in. So da-da-da-da-da-da.
What do you think about PROPY? Propy.
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 I think the CEO is cute. I do. I think she's an attractive young lady. She's got a great background. I'll be honest. I think it's clunky. I have some experience with Propy. When I moved to Costa Rica, I was very interested in becoming a agent for them, and because I was finding properties that were willing to say, hey, Jerry, yes, sell this for us. And I wanted to get them on their site, and their whole user interface and all that stuff was rather clunky.
Okay.
And they were very non-responsive, considering I thought that they wanted to get properties that could be purchased with crypto on their platform, yet I'm a guy saying I got many properties in Costa Rica that want to go on your platform and you won't answer my email or interact with me and help me. All right.
Yeah.
So I thought that was odd.
Yeah, I want to put in a first cousin of this that is very, very important. So your assets grow, and we know that there's Nexo and Celcius and other places where you can borrow on your assets. You can stake, and at some point you will have enough assets in your tokens where you can borrow against them for a reasonable interest rate, at least now, and get a loan. Now, the key about that is it does not trigger a tax event, and you can use those proceeds to buy the property. And that is not a tax event because it is a loan, and under current tax rule, at least in the United States, and that's a great way of avoiding a tax event. So I realize that's a first cousin to it, but it's a very good.
I took it one step further, Billy. I
Okay.
got in contact with the founder and CEO of Lofty-IA or whatever. It's Lofty. And Max and I had this discussion this morning. I had the idea of tokenizing my Costa Rican Dream project.
Right.
Even though it has not been built, I'm buying the property and I'm da-da-da-da-da. And I thought, you know what? Let's tokenize this sucker and see if I can get some of the funding to build it through tokenization. Because we're only US based. We're only going to do US for right now. I'll let you know when we expand. Okay, great. So great. Darn.
Yeah.
And then I thought to myself, you know what? There's some of these blockchain projects that I can go create my own NFT and put it on an ocean, sea, or some open NFT marketplace. I may still do that. You know what I mean? I may still do that. And then the idea came to me, what if I don't do something silly like that? Why don't I create a bond where I'll guarantee a rate of return backed by my crypto portfolio to see if I can generate some buzz.
Oh, I like that.
Right?
Yeah.
I'll do a 4 or 5% bond.
Yeah.
You know what I mean?
Yeah.
To get the capital, because I don't want to sell my assets. I'm not a multi-billionaire yet.
No.
So anyway,
Good
Billy,
point.
I got a treat for you, young man.
Okay.
All right, this is big time. Our lady on the street, our weekly contributor, always
That
comes
really
in
sounds
with all
very
the yummy good stuff.
Uh-huh.
Bitta Avenue's in the house. Let's welcome Bitta Ave. Hey, Bitta.
Bitta, good
Hi,
to see you
everybody.
again. Hi.
Good to see you, Bill.
Yeah.
How are you guys?
Doing
Happy
great.
Friday.
Good to see your shining face.
Oh, thank you.
So
Hi.
your thoughts on the show so far, Bitta?
Yeah, so I was listening to Bill talk about how he transitioned from the forex to crypto, and how he was first holding primarily just XRP, and somebody that has that I guess corporate experience and all the other experiences that he has with risk management and things like that. What was the reason that you were only holding XRP with all? Is it because you only like looked at that project, or is that the only thing that you knew of at the time? Like, what's the reason that you did that?
Yeah,
Yeah,
you always
explain
come up
yourself,
with-
Bill. The world wants to know.
Yeah, right. I just love your great precocious questions. I really do. What happened actually was I was frustrated with Forex. I was trading in about four to eight markets, and I just felt that there were too many variables that I could not control. And that really bothered me a lot. I realized this is not something I can depend on. I had taken 11 courses in Forex, 11, and really knew it as a basis. But it just wasn't dependable to me. And then crypto comes along. I hooked on to Tika Tuwari because he was a good resource who I vetted. And I actually got into about 40 to 50 cryptos on the front end. And then as I continued to do more research, I whittled it down and ultimately ended up on the doorstep of XRP because I felt it was the most commercializable sooner, the most solid and widely spreadable crypto. So that was
Key
my
point: commercialization.
Yeah.
Okay.
It was going to have appeal to industry
Yeah.
much faster than any of these other elements.
Yeah.
Bill, I felt the same way. Biddick, fire away.
Yeah, because I mean, I did have I mean, it's not the same. My numbers are tiny compared to you guys' portfolio. So, but within my own tiny bag,
Wonderful.
I did have a big portion of my in the beginning, a big portion of my portfolio was XRP, but that was because that's the only thing I knew of at the time.
Yeah.
And as I learned, I started adding more and more and more. However, like I said, it's only like very few. It's a very small bag. So it was more of, okay, at least on this run, let me learn what all this stuff is so that when the next cycle comes, I'll be ready. But this cycle, I just want to put my foot in and just learn and understand how all that works.
Fabulous philosophy.
I'm sorry?
Fabulous philosophy.
Oh, thank you. So, and a lot of the stuff that I think, especially with, like when you talk about risk, what percent, well, maybe not percent, how do you calculate your not knowing things as far as your human factor? What's your human factor in the risk assessment? Like, where does that fit in? Because not knowing and not understanding how things work is also very risky when you're doing investments. How does that factor into your system?
Yeah, another great question. What I do is the degree to which I don't know something, I do two things. I learn as much about it as I can, and I surround myself with the experts in that space and learn from them. The more I know, the less the risk, right? Even to the point that I'll pass on it. That's risk management. So my point is, you really supplement. I mean, you just have to educate yourself on the asset and surround yourself with people that really know the asset in places such as YouTube. Got to be very discriminatory because there are hundreds out there, but there are only maybe 3 or 4 really good ones.
Yes. How do you pick which ones are good? Like, what information are you looking for from them in order for you to use them as a resource? Like,
a whole bunch of different factors. I mean, I really look at their track record. How accurate have they been on their predictions? How accurate have they been on the pace of development on their, So basically, I look at their whole track record. They say a lot. To what degree is it verifiable and validated by what the market is doing with that asset? I mean, they're on record and they're accountable, and not from a legal standpoint, but from a professional standpoint for their accuracy. Yeah.
Right. Yeah. How much of your Forex helped you in your crypto? Like, how does that even like relate? Like, how do you go from Forex to crypto?
Yeah, I would say it's as simple as going from a trader to an investor. Forex was by definition transactional. It was episodic. It was get in, and it was really the amount of time you're in the trade. You could be in the trade, I guess, for a few days, and some take longer positions. Don't get me wrong, but I was a trader back then, and now really I'm an investor who is opportunistic to make trades when I see low-lying fruit.
Oh, okay.
Yeah.
As far as do you not see, because I've done some forex trading, I'm not expert at it, but I'm like a beginner level, like I'm a little past beginner level nowadays, but I do enjoy watching people trading. I do enjoy looking at the charts and understanding the charts, and I still kind of trade a little bit just because I actually want to learn how the charts and the analysis work, not so much to make money, but more because I want to understand how the chart works.
Yeah.
Do you not has the times changed from when you were doing it from 2001 on, or 2011 before that versus now? Like what are the differences as far as the charts are concerned?
Yeah. So no, I have not stayed soaking in Forex, so I can't give an accurate account of to the degree to which they've changed. However, I would say this: what really disenfranchised me on Forex was the degree to which new news could blow up technicals. You could have a really good bead on the trend, and then something comes in from left field. And I think that's what moved me from more of a trader mode to an investor mode, because in crypto, yes, you get blown out of the water, but you can take positions with a view to the long term. And I think that was what really intrigued me. If you look at Forex, it is much harder to say, oh, I'm going with USD. That's my currency, et cetera. So I felt much more comfortable taking longer positions in cryptos that had more of a discrete audit trail that I could really sink my teeth into. And cycles, I understood, even if it went down 70%, I understood that in the long term, it could pan out.
Okay. What is your favorite analysis? Because everybody seems to have like their own, like some people use the Fibonacci, and some people, like everybody has their own style. What was your style, and which part of those have you taken to the crypto market?
Yeah, I use fibs a lot. I was the type of person that wanted to get as many credible angles as I could. So I would get into something and really look at 5 or 10 factors. MACD and RSI were two important factors for me. In fact, I had them on my chart, and I would post Fibonacci's when I wanted to see the larger trends. But I felt that RSI and MACD they really stood out for me as being critical Forex indicators.
Well, because they're very immediate.
Yes.
Yeah.
I mean, they're real time. Those are real time metrics.
Yes.
Right.
Absolutely.
Right. Well, we are at that wonderful time in the show where I tell Brady to get ready to come in. We're going to do final thoughts. I will tell you one of the things, and I'm not a technical analysis guru. I understand it. I don't put a lot of stock into it in the crypto market. I'm more of a macro trend guy. So I'm trying to understand from an analytics standpoint, using analytics to tell me how things are going to pan out. I'm looking at demographics, right? All you need to do is go back and look at how did the United States become the United States that we know today? Powerful, rich, etc. It was the baby boomers. It was everything after World War II, the way we conducted business, the way we ran our monetary policy. And when the productivity of our country started slowing down as the boomers had produced the Gen X, my generation, which was much smaller than the baby boomers, they replaced productivity with credit, which was brilliant to keep the ball rolling. And because the world was based on a petrodollar, the whole world had a demand for dollars, which meant we had to become no longer creditors, but debtors to the world.
Yeah.
Right? Well, look at those trends. I'm a macro guy. None of the fundamentals have changed. So what does that mean? That means our government is going to continue to spend more than it makes, which means it's going to spend more than it brings in for tax returns, from tax receipts, I meant, which creates a monetary policy of even cheaper and cheaper and cheaper credit, which we now are at zero, right? Rates are at zero. You can't earn anything risk-free anymore. And that is just the perfect environment for what we're in. We have these digital asset space is the solution to a 40-year-old problem.
Well said.
Yes.
I don't need to look at a chart to know where this is going, because something completely outside of crypto is driving it, and its monetary policy driven by the rest of the world is the driver for our asset class to go crazy.
Wow.
There's not one chart involved in that analysis to come to that conclusion and that conviction.
Right.
But if
Just
you're
for
into charts, I think it's wonderful. I think it's great. All right, Brady, come on, man. We're going to do final thoughts, and I would like to start with Bida. Your final thoughts on the show and just where you're at and where you think this space is at.
I think that for somebody that has like very little, to be able to still see the growth in your portfolio and still have to go through the stuff that I went through as far as getting hacked, getting my accounts closed, reopening. I have learned so much that it's been a great accomplishment for me, because that was the whole point, is like I want to do my trial and error now so that I can get ready for the next cycle. And it has taught me so much as far as security, as far as how to pick asset, what kind of resources, and everything you two talked about today. So it has been a great journey. Even though I've lost some, the knowledge that I've gained, I feel like will pay in folds and folds and folds. So I am absolutely okay with it.
Right on.
Right in the future. Bida.
All right, Billy, do you have a final thought on any of the topics we covered tonight, or even anything we didn't?
Just that don't be in a rush. This is a long-term realm that will prove to be revolutionizing. Just get into it, be calm, just look for the experts, look for the research, just take in and learn. Start simple, start small, manage your risk, surround yourself with people you trust. And have a plan, be willing to adjust it upon new news, and enjoy the journey. It's a rough and tumble ride, but it's highly lucrative if you stick with your success principles.
Right on. Let's welcome producer extraordinaire Brady.
Hey, Brady Bunch.
Hello.
Hey.
Brady, your final thoughts on this extravaganza.
It can be summed up as this. Growing your balance sheet, or rather grow your balance sheet so that you can put more of that money to work for you sooner than later. And always keep always observe your time horizon. I think we often think in bear and bull markets, but it's more of time horizons, goals, and put up or shut up.
Yeah, I used the term to explain exactly what you just said, understanding the network effects. So how do I analyze where a network is in its growth cycle, right? So if I make the presumption that a network is necessary, right? This network is necessary. We'll call it Bitcoin or Ethereum or what, it doesn't matter. If I believe it's necessary, where is it at in its life cycle? Like, right? Is it a baby? Is it a newborn? Is it a toddler? Is it a preteen? Is it a teenager? Where is it at in its maturation cycle? And be willing to let it grow up. Right. Being willing to let it grow up. I am so excited about this space, partly because I have now found the correct appreciation calendar that I can plug into my existing interest yield calculator spreadsheet. I've got it all dialed in, and now I can forecast my yields accurately and assign an appreciation rate to assets. So I'm in the space every day. Everybody knows that, right? I'm here. I study all the time. Today was the first day I put my portfolio to my new updated spreadsheet with the appreciation calculator along with the yield calculation.
Woohoo.
It's not fair, folks. There's only so much money in the world, and this guy is going to gobble up a shit ton of it. Although I don't feel bad for any of you because I know all the governments around the world will continue to print more.
Yes.
So there'll be plenty for you guys.
They'll also look for how to extract what you have gained back into their pockets.
And that speaks to another point. This year has been, I have totally, that whole new information thing, not your keys, not your crypto, there's validity in that. But I am a yield guy. I've got to get yield from my assets. Well, how many of these blockchain projects that I'm invested in, smart contract platforms, have a protocol wallet that I can stake directly from them?
Right.
There's no delegator in the world that's going to 1099 me. They don't know who I am. I don't KYC my Daedalus wallet. I didn't KYC my Algorand wallet. I didn't KYC the Avalanche wallet or the Elgrand wallet or the Atom wallet or the Avalanche wallet, or, it's just basically Ethereum. They can Kraken can get me. Nexo can get my Bitcoin and my Ethereum. Good, so okay, I'm going to pay some taxes because I'm going to do everything legal.
Right.
But if I can find a way to avoid doing something illegally and still not get raped by the IRS, I'm all for it.
Yeah.
So anyway, folks, my final thought is don't be afraid to dream.
Good.
Do some friggin' math. Go to an open source appreciation calculator on the internet. Throw in your portfolio value that it is today. Put it at 100% per year. Put it at 5 years and look at what astronomical returns really look like. I think it is fair to say very conservatively this space will grow 100% a year for the next 5 years. I think that is fair to say. Does any of the panel, any of you guys here on TV with me disagree with that?
I think that's fair, and a lot of people are far beyond that, as you know.
Billy, you think 100% a year, Brady?
That sounds accurate and within reason.
Okay, well, so therefore, all four of us were it's 100%. We are, what is that word? Unanimous.
Yes.
Right.
So plug in 100% and see what the number looks like. It is friggin' staggering.
This is why patience
year over year, gains like that, folks. It's all right here. Be patient. Find some good voices to listen to. Build a community around you. If you don't have one, hit the link in the description below and join the Patreon group. We've got a very robust investor community right in that little Beyond Moon Investor Club. It's kicking ass. It's rocking. And until next week, on behalf of Bill Bean, Bitta, and the ever popular producer Brady.
Yes.
Pura Vida.
Bye.
Bye.